All right. So, obviously, if you guys are new, my name is Akil Stokes. I am a professional trader, trading coach as well, and I try to do these periscopes every once in a while. I like doing it at least once a week just to give you guys a chance to communicate with me. Many of you guys are in the live room, but most of you only see me, well, I guess many of you in the syndicate as well, but most of you only see me through my YouTube videos, which is once a week, and even syndicate members, you don't really have a chance to interact with me like our live room members do. So I try once a week to give you guys a channel. What's going on, Greystone? Taking a break from recording. I give you guys a channel where you can talk to me, you can ask me questions, and at the same time, kind of keep you updated on how we're doing. And I got a lot of questions last week, or either last week or the week before. I forgot which one of them, but I had a horrible week of trading. Was stuck in a pretty bad drawdown, and I got a lot of questions asking, hey, how do you deal with it? Do you give up? Do you switch your strategy? How do you work through that drawdown? And we had a pretty powerful lesson in one of our private Q&A sessions about the evaluation process. I got a question from one of our 12-week transformation members who just was asking me, he knows I do my evaluation process of my trading every quarter, and he just wanted to see, what exactly are the steps that you should take. So I want to kind of share that with you today. Obviously, we're not going to go into full detail, but it's important to understand, guys, that trading it's like a marathon. It's not a sprint. You shouldn't have, I don't really have too many performance goals. We call them outcome goals, meaning I don't shoot for this much money a month, this much money a year, this much money a day. I don't shoot for a certain win percentage. I don't shoot for really anything. Now, don't get me wrong. I have a good idea of where I should be. I have a good idea where my win percentage should be year to year. I have a good percentage of where my ROI, my return on investment, should be year to year. But the only goals that I'm shooting for are process goals. And that means, am I trading the right way? Am I executing my system? Am I doing everything that I'm supposed to? Thanks, man. All wood grain, right? So one of the things when I do my evaluation process is I don't look for stats. I don't say, oh man, I lost this much this month or lost this much this week. I evaluate my trading from a performance standpoint. Did I make any mistakes? If I did make a mistake, how many times did I repeat those mistakes? And then one of the things that I always want to understand is if my trading isn't going well, hey Elaine, if my trading isn't going well, is it me or is it my system? And it's important to know one of two things. Like I mentioned before, drawdowns are natural. Type in if you've never experienced a drawdown. I don't think we're gonna have anyone type in, but do it. Gives me a chance to sip my Gatorade. Right? So we've all experienced drawdowns. They happen no matter what, no matter how good of a trader, no matter how bad of a trader, no matter what system you're trading. You're not winning 100% of the time. You're going to experience a drawdown. It's important to know whether that drawdown is caused by you, the trader, or is it caused by your system. So you want to crunch the numbers. If it's you, the solution is easy. You got to stop making those mistakes. You have to identify what those mistakes are. You should do that in your daily trading evaluation. And you need to make a conscious effort to stop doing them or put yourself in the position where you're not going to be able to do them. If it's your strategy, that's where the numbers are going to come into account. And you want to go back to your statistics and make sure things are lining up the way that they should be. Now, when I say should be, each year is different. Each year we have different market conditions. This year has been a wacky year in the market. Typically the market is kind of like a soccer match, right? It's like a soccer match where the action is always going. Sometimes, it's a long ball and they're sprinting really hard. Other times they're kicking it around, but it's always paced, right? This year, the markets have been kind of more like a football game where it's, you get these 6 seconds of massive movement, boom, 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 like a football play. And then you get this down period where it's the huddle and just nothing's going on. And it's affected a lot of our trading. I was going through the statistics again, kind of evaluating what we've been doing, and it's been a much slower year. That's one of the things I noticed. Again, I won't go into a lot of detail and bore you guys with these numbers, but I was comparing stuff like wins and losses. I was comparing total trades. I was comparing the equity curve. And if I upload this on YouTube, I'll show all of the charts up there. So just go ahead and go over there and check it later. But I was looking at some things. I'm noticing that, basically our win percentage is the same. Speaking of the syndicate program, we had a massive year last year. This year we're doing good, but not anywhere near what we did last year. So our win percentage is about the same. We're about a 2% difference in our win percentage. Two things that stood out to me is one, our trade difference. We're about 2 or 3 trades less per week than we were last year. And that doesn't really sound like much when you think 2 or 3 trades per week. But when you look at that over how many weeks we've been through, we've been trading for 14 weeks this year, you're looking at about 30 trades less. And that is going to make a difference. The less opportunities that you have in the market, assuming your system has a positive expectancy, the less opportunity you have in the market, the less profit you're going to bring in. We're about 50-50 in the syndicate. I didn't see who asked that question, but we're about 50-50. And then the last thing underneath that was the average per trade. And this is not average win, average loss. This is average per trade, so that expectancy. Last year, we were sitting at about 9 pips per trade. So win, loss, all of that together, total trades. The average, every time we execute an order, we would make 9 pips. This year, we're sitting at about 5. So that's down as well. And you look at those numbers and you start to see some red flags, not red flags on our behalf, but just red flags on the market conditions. And you want to ask yourself this question before making any type of bold move, where it's like, I need to change strategies to get more opportunities, or I need to do less of this and more of that and more of that and less of this before making any changes. Because typically when we make those emotional related changes, that's when we sabotage ourselves. What you want to do is you want to ask yourself, am I on track to be where I want to be? How many of you guys have an idea of where you want to be at the end of the year with trading, return on investment wise? Doesn't matter what it is, but how many of you guys have an idea? KP says, yep. And some of it will come from back testing. Some of it will come from past performance. I know me personally, I always say this. You've heard me say it millions and millions of times. Break even. I'll tell you what, people are going to laugh at that. Break even's not bad. Trust me. The majority of traders out there are losing money and blowing accounts. They're not even making it a year. So break even, that's not a bad goal. So don't laugh at this trader when you see this. My goal is I want to be in that range. It's always said this. If you're a good trader, right? Average good trader should average about 2% a month, right? That's not counting any money management, no compounding, anything like that. 2% a month. A really good trader, you're going to be about, I think it's 5 or 6% a month. So I always want to be within that range. I try to average about 3% a month. And again, you can't see it on the Periscope, but I'll show you a chart if I put this on YouTube. But I like to measure out what 2% looks like, what that 5% looks like, and I like to fit my equity curve in between and see if I'm still in that range. So even after seeing these numbers saying that, oh man, we're taking less trades, our average pip per trade is down, our win percentage is a little bit down, when we put that equity curve within that range of 5 and 2%, we're still right on track to where we want to be for the year. And that's important to know because, again, the worst thing you can do is give up on your strategy, ditch your strategy, which you've put all the work into testing and evaluating and spent hours and hours and hours and hours refining. The worst thing you want to do is ditch it, right? Leave it, go to something else. And as soon as you go to something else, your old strategy starts working, your new strategy hits a drawdown, and then you're busted. So that was kind of the recap for this week, guys. It's been a good week, slow week. We took about, I don't have it up. I think we took about eight trades only, 81 pips or 1% return or 2% return, something like that. It's been very slow week, and that's just how the trading year has been. But this is the time we do for our Q&A. That's the brief recap I wanted to give to you guys. Now for Q&A, ask your questions. We'll spend some time answering them, and then we'll head out. Win percentage is highly overrated. That is a big myth. It feels good. It looks good. It sounds good. Win percentage really does not matter. We discussed this in the live room If you guys do some research on Richard Dennis and the Turtle Traders, right? They averaged about 30 to 40% win percentage, right? Profitable strategy. You're going to get trend continuation type strategies that only win 20% of the time that make more money than a strategy that's winning 90% of the time. So you really got to get your head out of higher win percentage means more profit. That is definitely not the case. I just opened a live account. What is your best advice? Do nothing different than what your plan says, right? I'm assuming you did some successful paper trading, right? You've got a plan. Don't let live money allow you to deviate from that plan. There's going to be emotions that stir up once you see actual money going and leaving from your account. Do nothing different. Just follow the process. Follow the process. What markets are good to trade after 4 p.m. Eastern? I wouldn't trade any of them after the New York close or towards the end. Really after the London close, the markets get pretty dead. After New York closes at 5 o'clock, then after that's the Asia session. I personally don't trade with those sessions, so I would stay out of them. I'd stay to the majors. If you're going to be assuming you're day trading, you're talking about, I'd stick to the major sessions, the London Open, the New York London Cross. Those are you're going to get the most action during those time periods. How many pairs should I trade maximum? Depends on how many strategies you're trading, but you want to find a comfortable level. I would always start with a small amount of pairs. Once you're comfortable executing your strategy or strategies on that small basket of pairs, then slowly increase. You also got to make sure that you're not sabotaging your money management as well. Adding pairs to your portfolio, that adds risk. Adding risk means more maximum drawdown. So you want to make sure your maximum drawdown, even with those added pairs, still stays within that allowable limit. But you got to find that comfortable level. We had a question the other day in the live room about this too. I always say that, hey, if you're going to trade, the smaller the strategies you're going to trade, the more pairs you're going to handle. The more strategies or techniques you're going to use, the less pairs that you should trade. So for me, example, I trade advanced pattern formations, trend continuation, counter trend, structure trading. So I don't want to trade 30 pairs, right? Because it's just going to be overwhelming. I'm going to miss too many opportunities. When I miss opportunities, I'm sabotaging my expectancy. Our vice president at Trade and Power, Darren Oglesby, he's the one that invented the cipher pattern. He only trades ciphers, but because he only trades that single strategy, he can trade it on 20 something pairs because he's only looking for one thing. So it's a balancing act. Should you go to university or trading or pursue trading full time? Both. You can learn to trade while you're in university. Mm-hmm. I learned to trade. I took a professional trading course. I did not do any college courses. In fact, I switched my majors my freshman year of college because microeconomics was too hard. Believe it or not, microeconomics was too hard, so I switched majors. But you don't need any traditional form of study. My advice is invest in a professional trading course. You don't need to go to school for it. Nothing wrong if you do. There's nothing wrong with gaining more knowledge, but you don't need to. Would you suggest only trading against one pair? For example, the yen? No, I suggest trading what your plan tells you to trade. Yep, following your trading plan. So whatever the charts tell you, if it fits the plan, trade it. What course do you recommend? Easy question. 12-week transformation course. That's the course I teach. I may be a little biased. I think that's the best course out there. Could be slightly biased, but yeah. How much is my course? It is what is it? $39.97, I think. Let me know if I'm wrong, guys. $39.97, I believe it is. You can go to our website, tradeandpower.com. Click products and services. It's under there. I believe it's $39.97. I probably should know that, right? It is the best course. Thank you. We got a lot of 12-week transformation members in the room now. It is the best course. Thank you. The other thing about too many pairs is high risk because of correlation. Yes and no. It depends. I'm not a big believer in basing trades off of correlation, but I also do understand that correlation does happen. Now it does change, but that's certainly true. You guys know the story of, or many of you have heard the story of how I lost like $30,000 in a very, very short period of time a while back ago. One of the reasons for that was because I had too many correlated pairs in my portfolio. I was trading a basket of yen pairs. I think I had like 4 to 6 yen pairs, yen crosses in my portfolio. And, because they were so correlated, they all provided me the same signal at the same time. And unfortunately, they were all losers because I was going the same direction. I was overexposed versus the yen. So correlation does occur. You want to be careful when building that portfolio that you diversify enough not to put yourself in that type of trouble, especially with yen crosses. Yen crosses they seem to be more correlated than most. Yes, I'm agreeing with you. Yep. Is 5% per trade being too risky? That's only a question that you can ask. How good are you? You can determine what your maximum allowable drawdown is. Only you can determine your comfort level. How important is it to collab with other traders to find flaws within your trading? I think it's important to collaborate with other traders, but not necessarily to find flaws in your trading. Understand that we all trade differently. A perfect example is Jason Grayson, who just typed in. We have Elaine, we have Brandon, we have a bunch of 12-week transformation members in our Periscope right now. Those are people that came through my trading course. If we were to put us all together, none of us trade exactly the same way. So the same principles can be used, and I think it's beneficial to collab with other traders to get ideas. Hey, why did you do that? Why are you looking at the market from this perspective? But not necessarily to change your trading. Once you've tested and gone through the process of developing your trading plan, and you have a consistently profitable way that you trade, you should stick to that way. I think the more value in collaborating with other traders is up here. The mindset. We talked about it earlier. We all have drawdowns, right? Well, drawdowns stink, right? No matter who you are, no matter where you're at, drawdowns stink. But you know when they stink even more? They stink when you're by yourself and you have no one to tell to. That's when you feel like you're floating in space by yourself. It's never going to end. There's no one to save you. When you're experiencing a drawdown, you have a community of traders saying, hey, I'm in a drawdown too, or misery loves company. It helps you feel, man, it's just not me. It's the markets. Jason is also experiencing this drawdown. Elaine is also experiencing this drawdown. And it also gives you people to pump you up. I got motivated yesterday. We have a great community on Twitter. I got motivated yesterday. A trader shared with me his notepad of taking notes and learning how to trade. And I'm like, man, I should be doing something. So it kind of keeps you pumped up. It does give you someone to talk to trading about, which is important. It gives you someone to vent to as well. Elaine says a great community keeps you sane, keeps you following your rules during drawdowns. Yeah, that's one of the biggest compliments I get from my live trading room is that we have a lot of traders in there trading different styles, and some of them take the same trades as I do. And we have some highly emotional trades, and we have trades where we enter it right away. It goes against us. We're in the red for an hour, and people are like, I gotta get out. I gotta get out. Gotta get out. And we're looking at it. I'm sitting there calm as usual saying, well, stinks that we're in the red, but we got to stick with it. We got other traders typing in, hey, just stick with the trade, motivating, helping people out. And it gives them that little bit of a push, that little extra encouragement to follow their plan. And when you see that pay off, it's just amazing. So I think it's great when you can have a good community to surround yourself with because it just makes everyone better. Now, when I say that, I don't mean chat forums. Chat forums are the exact opposite because chat forums are full of people that make you want to feel like crap. Unfortunately. Instead of a community of people trying to help you out saying, if I were to come into a chat forum, right, and I say, hey guys, just lost 5 trades in a row. The first thing I'm going to get is Pip Monster saying, oh, you stink. You should stop. You should follow my system. You should do that. And people making you feel bad. How'd you lose 5 in a row? I'm up 80% in the last hour. And it makes you feel bad. It doesn't help out the situation, right? So you got to find people that understand, that aren't there to tease you, that are there to help pick you up. Yeah, I started off in the stock market. Yeah, I dumped stock trading for the Forex market. A lot more liquidity. You could do a lot more with your money in Forex. Forex is not easier. No market is easy. Let's put it that way. Every market has risk. Every market is incredibly hard to trade successfully. Forex has a lot more movement. It offers a lot more opportunity, which is a good thing if you're a good trader. It's a very bad thing if you're a bad trader. We hear all the stories about, hey, Forex market, the volume is this much. You can make this much money. Well, guess what's on the other side of that? What's on the other side of making this much money? What do you guys think? If you can make this much money, you can also lose that much money. But that doesn't sell, right? You don't that doesn't sell that doesn't sell. Really, I trade I like to call it a single strategy. It's just price action. Now, within that price action, there are different techniques. There's advanced pattern formations. There's counter trend continuation, structure trading. So maybe about 4 or 5 techniques. But really, it's just price action, meaning I look at the price chart, I look at the Japanese candlesticks, and I make my decision based on the movement of price. So no fundamentals, no indicators or anything like that. Price action. But within there's different techniques you can use. What was our return last year? We did 65% in our syndicate program. No money management. That doesn't matter though. Return doesn't matter. Process over outcome, guys. You trade the right way, you'll get the return you desire. You do your money management right, you'll boost that return the way you want to see. So don't worry about return, guys. Good questions. If I missed it, I'm sorry. I tend to get on these rants a lot. How to make yourself disciplined. You just got to do it. You gotta focus and just say, I'm going to do it. And you got to commit to it. It's the same thing about, hey, does anyone want to lose weight? How do you lose weight? Right? You find a diet and you stick to it. Now it helps if you have support. That's the biggest thing we offer in our course is support. That helps a lot because it's not just you by yourself. It's like the difference between saying you're going to lose weight and you're going to the gym by yourself, or you're going to lose weight and you hire a personal trainer. It's a lot different when you have that personal trainer there and you're expected to be at the gym every day at 6 o'clock. And when you have that personal trainer looking over your shoulder saying, come on, you have more than that, right? You can't really slack. When you're by yourself, it's really hard because, you're looking at that piece of cake and you're like, well, no one would know, right? And you start stuffing your face and, so it's doable by yourself. It just takes a massive amount of discipline. It's easier if you have support. And that support, again, it could be a training course. It could be finding a mentor. It could be having a community, joining a community on Trader and finding another person on there that's in the same shoes as you. And you just say, hey, we're going to hold each other accountable. But support is the biggest difference. It's the biggest difference. That and just going about the process of slowly eliminating those mistakes. Do you take account of pending news items? Yes, we take news into account. Yeah. We don't base trading decisions off of news. So I don't say I'm going to buy the euro because I think Janet Yellen's going to say this. We don't make decisions off of news, but we do take it into account when it comes into our trading. How much capital to have before you start trading? A lot of brokers offer micro accounts. So with a micro lot, that's 10 cents per pip. So you can start a micro account with $1,000, something like that, probably a couple hundred. Now you understand you're not going to turn that $1,000 account into a $1 million account, but you can start and get used to trading. And someone asked the question about should I not go to university and pursue trading instead? That's why I say, look, you can easily go to university and train yourself on the skill of trading. Trading can take years to master, guys. I don't want you guys thinking it's something you pick up overnight. It's really not. It takes years and years and years to really, I don't want to say master, to become consistently profitable. It takes a long time. And a lot of work. Now there are ways to shorten that learning curve, so it's not taking you 2 or 3 years to get it. But it does take time, even if you take a professional training course. You know, it took me, after I took my training, it still took me probably another year and a half to get good, and then probably another 2 years after that to really find my groove. So it's a journey. It's a journey. Kaizen philosophy, just think continuous improvement. Every day I want to get better by a little bit. And always think that way, because we'll never master these markets. Never. If we did, it wouldn't be fun, right? What fun would it be if we mastered it? Discipline. Watch Akil's YouTube. He will be echoing in your ear as you learn. Yes. Go to my YouTube channel. Subscribe. Watch the videos. Psychology is a major theme that all the traders at Trade Empowered preach in each and every one of our videos, because we know that's what it takes. If you had one advice, what would it be? Don't give up. I believe that people only fail when they quit. As long as you don't quit, you haven't failed. So don't give up. I've been trading since 2007. 2007. That's when I first got involved in the stock market. Bought up a little stock called Apple. You ever heard of that? Apple? It's a little small company. I think they did pretty good. I'm sorry, I missed some question. Yeah, I'm a full-time trader, yes. Do you trade the pound dollar and backtesting this pair right now? It's rubbish with patterns big time. I would disagree, but again, our testing is going to be different. Still, no, I don't think I own any stocks right now. No, I've got some gold, but not any stocks. I thought I was going to go back into the stock market. The bigger the education business got, the less time I had to actually do research. I'm a different. If I got back into stocks, it would be as an investor, not a trader. Wouldn't look to actively trade it. I would be more so investing in it. So I would actually have to do some research. Now I can still use my skills of technical analysis for when to buy, when to sell, stuff like that. But I want to make sure there's value in it. Can I do intraday trading with my job? Yes, or with a job? Yes. That's the cool thing about Forex as well. 24-hour market, guys. So unless you're working 24 hours, there's always time where you can get into the market. When did you know? That's a good question. When did you know you made it? I didn't. I didn't realize I made it until after I did. When I made my final turnaround, I say final turnaround because I had a lot of moments in my career where I was like, Keel, this is it. We're doing it. No looking back. And then you look back, it's like you go back to square one. It's like, all right, this is for real this time. I'm really going for it. I'm not looking back. This is it. And then, you mess up and you go back. The final time I did it, I remember it was winter. I had just blown a lot of money. I was managing money for a client. We had a falling out. I lost a lot of his money. Not all my fault, but I will take some blame for it. And kind of my dreams of being a professional trader were gone because I didn't have a big enough account to sustain my lifestyle, and it wasn't a good lifestyle at all. But I'm talking ramen noodles and peanut butter sandwiches. But I couldn't sustain that lifestyle trading, which is why I went into money management. But without taking commissions and whatnot, there was no way I can trade full time. So remember, it was December. The markets were slow. I don't really trade in December because of that. And I said, hey, Keel, we're going to take the full month of December. We're going to go back through your training course. We're going to relearn the right way. We're going to get your head on straight. And instead of thinking about the money, because my mentor, Jason Stapleton, he would tell me every day, don't think about the money. Think about the process. And I'd be like, yeah, I'm doing it. I'd go home and I'd think about the money because, that's what we do, right? Let's just be honest. But I finally told myself, let's stop thinking about the money. Let's just trade the right way. I've already given up on being a professional trader. It wasn't going to happen. The money I laid aside to survive was running out. And I said, let's just see if we can do it. It's like a game. Let's just see. I don't like failing at stuff. Let's just do it to say that you're good at it. And I told myself that in order to become a better trader, I had to eliminate my mistakes. And I simply made the goal to have one less mistake per month. So, for example, in January, if I made 20 trading mistakes in January, it could be all types of mistakes, moving stops, entering early, entering late, not entering at all, you name it. If I made 20 mistakes in January, my only goal in February, the only goal was to make 19 or less. And I figured if I were eliminating at least one mistake per month, right, I was going on the right track. Now, I eliminated more than that per month, but that was the mindset. And my full 100% focus was simply on eliminating mistakes and trading the right way, that I didn't look at P&L statements because I didn't care. Again, I had given up on trading essentially as far as making money off of it. And I checked probably April, like a quarter or so later, I checked maybe a quarter and a half later, I checked my P&L statement and I'm like, what? Like when did my account get to that? I was so locked in on process. I'm telling you, I didn't care about pips. I didn't track pips. I didn't care about anything, just process, good trades. And I looked at my P&L statement. I'm like, how the heck did I make that much money? It must be a mistake. I called my guy up. He's like, yeah, looks like you've been doing pretty good lately. And then that's kind of when I knew that, wow, like I did it. Like, I gave myself another quarter to make sure I was consistent with it. But at that moment, that's like, wow, you're onto something. And it kind of made sense. It was like, it's not about the money. The money will come as a result, but it's not about the money. It's about doing it the right way. So I don't know when exactly during that period I got it, but it was after I started becoming successful. That's a great story, isn't it, guys? It's not what you expected. Most people are like, oh, I just got really, really good. Nah, I sucked, man. I was pretty bad for a long period of time, even after taking a professional course. So hopefully that didn't bore you too much. Was that a good answer? Did you guys like that story? Many of you heard it already, but yeah, no problem. May I ask, how much do you have in your portfolio to trading Forex daily? I've got a good amount, not enough. Let's put it that way. Not enough. I don't have enough in my account. I need to make more. That's always going to be my answer. Not enough. More. Anything else, gang? We've been going 30 minutes. Are we talking 200K? Not enough. Come on, guys. I'm not going to tell you how much is in my trading account. I'm not going to give you bank statements. You got it. Come on. You know better than that. That's like asking your coworker what their salary is. You don't do that. Any stock recommendations? No, I haven't peeked at a stock market in years. I've checked it to do some technical analysis training and stuff like that, but trading wise, I haven't looked at it. I haven't looked at it in a while. I think I'm done with stocks. Yeah. When I get older, I'll make some investments, but not for a while. To grow your account once you're successful, would you recommend getting investors to grow your account? Yeah, there's usually one of two ways you can go. We actually talked about this in Monday's Q&A session about the future of trading. Two ways. You can either manage money, and manage money is the same thing as even if you were to do like a signal service or something like that, which are horrible, but managing money / signal service or education. Those are the two ways to supplement your trading account. Managing money or education. Hope this isn't freezing. My phone is blowing up, guys. How do you find investors for money management? Oh, man. I was actually talking to a good friend of mine. We're thinking about doing a Periscope just on that topic next week. Maybe we'll do that. Save that question for next week. But I did it the hard way. Lots of referrals and lots of doors being shut in my face. Very depressing. Thoughts on structure-based trading? I love it. That's how I trade. I love it. I think it's the best way to trade, in my opinion. Foreign exchange market. Forex is the foreign exchange market. Currency market is called as well. Yeah, we'll see. We'll see. Maybe we'll do that. How is real estate going? What angle are you? It's doing good. We just had a big meeting yesterday. I was actually, before I started this scope, we had a big list of about 7 potential properties that we were looking at. So that's why my phone is getting blown up. I'm hoping it's not messing up the Periscope, but my partners there's a group text, and I'm getting all of the back and forth without actually responding. But it's going good. We kind of game planned We kind of game plan for how we want to finish the year. Yeah, Everton. We kind of game plan for how we want to finish the year, and we're going to try and grab if we can grab 2 or 3 more properties, 2 or 3 more rentals within the next few months. That'll be good. I gotta wait to hear back on whether these properties, the list, whether there's something we want to follow through with or not. There you go. Look at that. Another text right on cue. I'm gonna have like 80 messages on my phone. But yes, it's doing well. It's doing well. And again, if I missed your question, just type it in again. Oh man, nope. We have a money management spreadsheet that we give away with our training course. Aside from that, I'm the worst with Excel, man. I'm probably worse than you. I can make like a column a different color, and that's about it. No, time decay, no. That's one of the reasons I would never get into options. I've spoken to a few option traders. I just think it's a whole different game. I don't think I would be good at timing. I'm good at finding levels, but timing is I can't tell you when something's going to reach something else. I would be pretty bad. It's a different game. Options is a different game. You can make your own. I use the Trading Powered spreadsheet for back testing and stuff like that. But I still use my own personal Excel spreadsheet for day-to-day P&L stuff. So if you can figure out how to if you just insert data, you don't need anything fancy. Now the fancy stuff helps, especially with back testing and maximizing your strategy and seeing what works best during what hours, during what days, which way. It makes the process a lot easier, especially with money management, with the compounding, whether you're doing fixed ratio or smooth ratio money management. It makes it easier. But you can certainly, you can do something like this. I still do it. Where to go? I still use a pad and pen, guys. I'm old school. I still, end of the day, I eventually put it into a spreadsheet. End of the day, I've got everything on the pad, write it in, boom, 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 and I insert it later. But I'm really big with, I like hands-on stuff. If I don't know, it's something about writing it down that makes it stick with me a little bit more. Could be old school. Call me old school. But I like it. All right. Anything else, guys? Going about 40 minutes. How did you find out about trading? My roommate told me I can make a lot of money. So I was like, yeah, let's do it. How to avoid overtrading? Easy. Stick to your plan. Only trade what's in your trading plan. If it's not in there, don't trade it. If it's not during your trading hours, don't trade it. If it doesn't meet your rules, don't trade it. Easy. Tell you, when you have a trading plan, life is so much simple. Should I do this? Should I buy or sell? Yes. How did you start making your trading plan? Basically, while you go through your education, you essentially, without knowing it, create your trading plan during the process. You just have to put it into writing and then evaluate it and continue to update it as time goes on. But it kind of happens as a natural progression. As you go through your training, as you learn to be a consistently profitable trader, you start developing that trading plan, everything from philosophy down to money management during that process. You just have to put it to paper. And then, of course, you refine it and all that stuff like that. What currency do you usually trade in Forex? I trade a handful of pairs. I've got about a 9-pair portfolio that I consistently watch. So it's not one, I don't specialize in one currency. I've got a hand. Yeah, I trade yen pairs. I've got what? Euro yen, pound yen, dollar yen, all in my portfolio. All right, gang. Looks like the questions have dried up. If there's anything else, get it in now. If not, I'll try to get this posted to YouTube later tonight. I'll include the graphs of the stuff I talked about earlier about I think I talked about equity curves and stuff like that. I'll try to put it up there to give you more of a visual of what we talked about earlier. And of course, hit that like, hit that share button. I am not on Periscope every day. No, I try to do it once a week, but I'm all over social media. So, follow me on Twitter, follow me on YouTube, follow me on Facebook. I post some entertaining stuff. So get over there and give it a like. I do use divergence. Yes, RSI divergence. But yeah, give me a like on social media. While you're over there, go follow Jason Greystone as well. J_Greystone. And Charles Miles. Follow everyone. Do I have 4 monitors? I've got 4 active monitors, yeah. I've got 4 active on this machine. Can you recommend 1 or 2 Forex brokers to operate? Too many bad reviews? No, I don't make broker recommendations. Sorry. Find a reputable one. That's your best case is to go with someone that is reputable. CTS is combined technical score. It's basically a checklist of a way to evaluate the markets for trading opportunities. How do you open a Forex account? Find a Forex broker and tell me when to open an account. Email them a check. No, I just have 4 monitors because it makes the coaching side of things easier. Honestly, for trading, I can probably do 1 or 2, but while I'm doing my training in my live room, I need one to look at the live room community. I need another one to show the active chart that we're looking at. Then I need a place to put my other charts at, and then the 4th one is just because this thing would look weird with only 3. For news, it's for news. Yeah, there we go. News. Yeah. First one, so I can watch sporting matches on TV while I'm trading. Let's just be honest. I could watch ESPN on the 4th monitor, or watch like some type of movie or Netflix or something while back testing. So, what do I need to log into the spreadsheet for a live trade? Lots of things. That's a whole different training subject, so we won't get into that. But thank you guys for joining me again. Head over to my YouTube if you're new. I've got hundreds and hundreds of videos over there. There's actually a tab called My Best Stuff or My Best Forex Videos. If you want to, those are kind of ones that the general public has said they like the best. So that's a good place to start. And of course, if you're looking for some free education, head over to our website, tradeempowered.com. Hit the Learn to Trade tab. By the way, did you guys read my article? What'd you think? Just curious. Oh, nope. What'd you think, Ben? Was it good, bad, or? That was my first article for a magazine that big. It's good. Okay, it's good to hear. Yeah, I'm serious. I don't really care if you guys say good or bad. It doesn't matter. I just want to get. I love getting feedback and everything I do. Just that's how you improve. That's how you improve. What poll? Waiting on the book. We'll see. We'll see if summer clears up. But yeah, if you get a chance to read it, if you haven't, it's on FX Trader Magazine, page 58, 59, I think it starts on. If you get a chance to read it, I really appreciate your feedback. I really like writing. You guys really don't like it when I write. Which has kind of put me off from writing, but I think it gives me peace to get my words on paper. So, but I also want to reach you guys in the best way. So if you guys like that article, let me know. Maybe I'll do some more in the future. But I just like seeing feedback because you never know if it's good or bad. Of course, I think it's good, but that's because I wrote it. So we'll see. Anyway, I'll see you guys next time. Until then, plan your trade. Trade your plan. Thank you for joining me. You guys have a great weekend.